Hello, everyone, and welcome to World Bank Live. I'm Srimati Sridhar in Washington, D.C. Now, today we're going to be talking about how investing in greener economies could be the key to helping countries build back better. We'll be hearing about how to place sustainability at the heart of recovery and how a greener focus will help us create new jobs and boost growth. Now, this conversation is part of a larger series we've recently launched here to look at ideas, but also actions that countries can take to build a more resilient recovery from the pandemic. Now, to talk more about how we can finance a sustainable recovery, I'm delighted to be joined by Peer Stein, who is a senior advisor for climate finance at the International Finance Corporation, or IFC. Now, of course, for those of you who might not know, the IFC is part of the World Bank group that focuses on the private sector in developing countries. So with that being said, Peer, welcome to the program.
Thank you, Sri.
So Peer, yeah, it's great to have you here. Peer, let's start at the beginning of this conversation now. We've got countries that are still responding to the immediate threat of the pandemic, but we've also got some countries that are beginning to look at the recovery stages of how to build back. So tell me, why now? Why is climate finance so important as we look at this stage of the pandemic and the recovery?
Yeah, thank you, Sri. Yeah, so COVID, of course, has created a lot of suffering, and people are eager to get their lives and their jobs back, and massive investments will have to happen as part of the COVID recovery. And we need to direct those investments wisely. It is a chance for us to really green our economies and make them more resilient. Of course, to try to avoid future climate crisis, which otherwise will hit us even harder than any virus could. And the green investment opportunity is huge. So for emerging markets, IFC expect at least $23 trillion of climate-related investments in renewables, green buildings, energy efficiency, transportations between now and 2030. And we expect jobs in climate-related investments to grow much faster than in many conventional areas. So in some instances, the COVID response or stimulus packages may even accelerate some of those investments, in particular those that are infrastructure related. So climate finance will really have to play an important role in the COVID response.
So it's great that you've laid that out for us, Peer. Now, tell us who should we be working with? I'm thinking about banks and capital markets. What kind of role do they have to play in sort of helping have this green recovery?
Yeah. So the public sector alone will not be able to mobilize the necessary financing, and the best way to solve that problem is really to leverage banks and capital markets. I don't want to be joking, but the money is there, right? Where's the money? The money's in the banks and the capital markets. Banks in emerging markets have more than $50 trillion in assets, plus $15 trillion in debt capital markets. And for banks and capital markets, green financing may very well be the single largest business opportunity of the next decade. The green bond market has been growing at the fastest pace of any asset class of capital markets. And we expect climate-related lending of banks to outpace conventional lending by a factor of 4. So the share of climate-related lending of banks in emerging markets will grow from about 7% pre-COVID to at least 30% by 2030. And let me give you one example of how IFC has been helping clients seize that opportunity. Ukrgaz Bank is the fourth largest bank in Ukraine and on the way to be privatized. And 3 years ago, IFC signed an advisory agreement with the bank to help it become a leader for climate finance in the country. And since then, Ukrgaz Bank has rebranded itself as a green bank, has lent almost $1 billion for renewable energy efficiency financing, and is on track to have 1/3 of its loan book to be climate related by the end of 2020, not even 2030. So being a green bank has become a key differentiating factor in its privatization strategy, while of course mobilizing essential resources for energy efficiency and renewables in Ukraine.
So, Pierre, it's great to learn more about this because, I've got to ask, for companies that have struggled to stay afloat, even people who have lost jobs and are simply just looking to survive, isn't it too ambitious to sort of ask them to prioritize environmental goals right now? How do we get their buy-in at this moment?
Right. Yeah, of course. I mean, this crisis has been extremely taxing on businesses and people, leading many to rethink their business model and even survival strategies, right? So environmental goals may indeed not be on top of everyone's mind in the day-to-day struggle. But as we are scrambling back on our feet and get to see beyond the short-term shock, I'm fairly convinced that the investment opportunities that factor in climate or environmental considerations are also the ones that will outperform conventional investments. And we've started seeing this across industries. So let me just give you two examples. Take the construction and building industry, right? So more energy efficient, green buildings have lower utility costs and higher resale values, so significantly outweighing any additional cost it may require to build them. And the second example is renewables, so which are typically now the lowest cost electricity source across countries. And for over 1 billion people that do not yet have access to electricity, because they live off the grid, solar power has really been a lifesaver. And what's, I think, interesting to see is that during the COVID crisis, renewables have actually outperformed any other source of electricity generation. So these are just two examples of many, but I do believe that prioritizing those investments now as part of the COVID recovery will ensure that we don't have to face a situation due to climate change that may be much worse than anything a virus could cause.
Absolutely. Well, Pierre, before we dive deeper into this conversation, let's take a quick break right here and welcome those of you who have been listening in online. If you're just joining us, welcome to World Bank Live, where today we're talking to Pierre Stein, a senior advisor for climate finance at the International Finance Corporation. And we're talking about how investing in greener economies could help boost a global recovery from the COVID-19 pandemic. Now, let's take a quick look at right now at who's joining us from around the globe. We have got Vincent from London, Sean from Iraq, Felix from Nigeria, Kadreen from Uganda, Idanek from Kyrgyzstan, Julie from Brussels, Ananya from India, and Nicole from South Africa. So, hey guys, it's great to have you here, and we hope you're enjoying the program so far. Pierre, let's get back to our conversation. I want to delve a bit deeper and look specifically at the sectors and also jobs that climate finance could support. So, tell me, where does the IFC think there's potential to grow industries and create jobs in developing countries right now?
Yeah, so we see the largest opportunities in green buildings and construction, in renewables, in transportation, climate smart agriculture, and energy efficiency for manufacturing and industries. And it's certainly urbanization, right? And urbanization trends in emerging markets are driving a lot of those opportunities, many of which are tied to the development of cities. So green buildings alone will take a lion's share of these investments, right? Out of the $23 trillion I mentioned, about $16 trillion alone will be in green buildings. And this, of course, coupled with investments in transportation systems and the need for electricity. And in addition to that, a large share of the population in developing countries are dependent on agriculture. So climate smart agriculture will play an important role. And for example, drip irrigation coupled with off-grid solar is just one of the technologies that promises to both increase productivity and incomes while making crops less vulnerable to droughts and other effects of climate change.
Absolutely. And I think it's so important we look at these specific sectors because, many wealthier economies are committing to greening their economies as they look to recover.
Mm-hmm.
So, it makes me wonder, why is it important for lower income countries to also do the same?
Yeah, indeed. For wealthier economies, this is clearly an opportunity to accelerate a transition that has begun many years ago. But we have to remember that the lion's share of future climate-related investments will actually not be in the developed countries, but in emerging markets. And low-income countries will have their share, as they require significant investments in their transition to a middle income status. And that, of course, is linked to urbanization, to infrastructure, to investments in industries and food supply chains. And it so happens that many low-income countries, unfortunately, are also particularly vulnerable to the impact of climate change, to droughts, flooding, and other severe weather events, including extreme heat and storms. So hence, for those low-income countries, it will be extremely important to also factor in the need for resilience, whether that is for buildings, infrastructure, or agriculture and farming.
So, Pierre, I think this is a great segue into my next question, which is that this current crisis has highlighted inequalities both between and also within countries. So, do you think climate investment could help address this issue as well?
Yeah, so climate investments are very important for shared prosperity. In fact, many climate smart technologies are aiming particularly at helping underserved families and communities. So, for example, I mentioned solar power earlier, right? Solar power has helped 400 million people that did not have access to electricity or were hard to reach by the traditional grid, right? And another example, energy efficient housing in Mexico has become the default for low income housing, because it saves precious money on utilities payments.
Great. Pierre, before we, continue the conversation, I think it'd be great to take a quick break right now. And again, welcome our viewers who are joining us from around the globe. If you're just joining us, welcome to World Bank Live. We're talking about the importance of building greener economies for a resilient recovery from the COVID-19 pandemic. And I'm delighted to have here with me Pierre Stein, who is a senior advisor for climate finance at the International Finance Corporation. Now, before we get back to our discussion, let's say hello to Aruna from France, Ben from Italy, Natalia from Namibia, Kay from Bhutan, Georgiana from Guyana, Khalid from Afghanistan, and Abel from Tanzania. So hi guys, fantastic to have you here. We hope you're enjoying the program and even learning something new. Pierre, we've spoken so far about the role of climate finance and also the particular players, different sectors and jobs that would benefit from a greener recovery. Now let's start to talk solutions. In the short term, tell me, how is the IFC prioritizing climate finance as part of its COVID-19 response?
Yeah, so IFC has been mobilizing over $8 billion in financing for the COVID crisis response, which has been primarily focused on short-term funding needs of our clients. But as part of this, we are offering our clients the option to support climate-related investments. Now, this is in addition to our regular business, which includes both investment and advisory support to help clients identify, develop, and finance climate-related business opportunities. And in fact, in the last few months, we've seen a number of firsts for climate finance. We did our first climate loan with blue elements, so water preservation and ocean preservation, our first cross-border green bond, both for banks in Africa, a first sustainability bond for a bank in Indonesia, and our first syndicated loan facility for electric vehicle financing in China. So a number of first and actually strong demand for the climate business overall. It's a bit too early to release, but we will certainly be actually on target even for this difficult year in terms of IFC's financing for climate-related investments.
So let's continue that and look at the longer term here. I know that building resilience or the ability to withstand future shocks is an important consideration. So tell me, how can climate investment help countries build back stronger?
Yeah. So I believe this is a unique historic opportunity, to invest in a future with more livable cities, affordable and energy efficient housing, clean energy and transportation systems that avoid congestion and brown skies. So we are already experiencing some of the negative impacts of climate change today, right? So it's not too late to flatten the climate curve and avoid catastrophic impact, right? And investing now in climate resilient infrastructure, cities, agriculture, and businesses, will be really investing in our prosperity for tomorrow.
So let's continue this train of thought, Pierre. The World Bank is forecasting a 5.2% cut in global GDP this year. So this is going to be some really tough times for many countries. But as we close, I've got to ask you this. Are you seeing actions? Are you seeing different decisions being taken that give you reasons to be optimistic about our future?
Yeah. Okay. So, I mean, despite all of the suffering, right, that the COVID crisis has brought to us, right, and the somewhat dire expectations, in particular for the poor, right, I am actually quite optimistic about the future, and here's why. So the COVID crisis is really the first truly global crisis of this magnitude in a century that we are facing together across the world, right? And I think it has given us a pause to realize that tackling such a complex threat like COVID really requires all of us to pull together. And that includes, first, political leadership, second, private sector investment and innovation, and third, personal action to overcome this crisis. And I think we've seen positive actions in all three areas, right? So, I mean, first, many countries around the world have shown the political leadership to take the necessary and often very unpopular decisions to really stop the spread of the virus, right? To flatten the curve. And to avoid that hospitals and the healthcare systems are overwhelmed, right? Second, businesses have really pivoted on a dime to innovate and invest in new ways to operate and deliver goods, services, and knowledge, and are, of course, also leading the way to find cures and vaccines for the virus. And third, and that's probably the most important one, is I think every one of us has learned that our personal choices and behavior have an immediate and direct impact on the spread of the virus, both for us and for others. So if we apply those lessons to the climate crisis ahead, I feel very confident that we're going to prevail and we will build much stronger and more resilient economies and societies for us and for our children.
Great. And I think it's important that we end on that high note. Folks, we are out of time. Pierre, thank you so much for being here with me this morning. It's been a great conversation. Folks, Pierre Stein is the Senior Advisor for Climate Finance at the International Finance Corporation. And yeah, it's been a great discussion talking about how we can build a sustainable future as we look to recover from this COVID-19 pandemic. If you want to learn more about what the World Bank is doing in response to the COVID-19 pandemic, be sure you check out our website. It is worldbank.org/coronavirus. And, you can always tune in to our past programs and, catch up on what we've been talking about by going to our website, live.worldbank.org. I want to thank you again so much for joining me this morning, and we hope to see you again soon. In the meantime, stay healthy and stay safe. Goodbye.